Welcome to The Explainer. Today we're diving into a real head-scratcher from Wall Street. ITRN just reported its second quarter earnings, and management, well, they called it another solid quarter. But the market? Oh, the market had a totally different take, and it was dramatic. Let's get into it.
So picture this. The earnings report drops, and boom, the stock gets hammered, dropping about 10% at its low point for the day. I mean, that is a brutal reaction, especially when the folks running the company are telling you everything's going well.
And that right there is the big question we're tackling today. What on earth did traders see that made them mash the sell button so hard? Was this just a massive overreaction, or did they actually sniff out a real problem hiding under the surface? We're going to unpack it all.
All right, so first things first. Let's look at this from the market's perspective. It really all boils down to the headline numbers and, more importantly, what Wall Street was expecting to see.
And yep, here's the problem in black and white. On the two big metrics that everyone zooms in on for earnings, Ituran missed. Earnings per share came in 6 cents light, and revenue was short by over $2 million. Now, if you're a trader just scanning the headlines for a quick decision, that's a textbook disappointment. But you have to put this miss into context. I mean, look at this chart. This wasn't some sleepy stock. ITRN had been on an absolute tear, up almost 50% in the last year, just crushing the S&P 500. When a stock has that kind of crazy momentum, investor expectations are through the roof. A small miss suddenly feels like a huge failure. Okay, so the market saw a miss, plain and simple, but what was management's side of the story? Well, they pointed to a couple of pretty big external issues that, frankly, were totally out of their hands.
First up, a regional conflict basically brought the Israeli economy to a halt for about 12 days. Now, why does that matter? Because it slammed the brakes on new car sales, and that directly led to a 6% drop in ITRN's product sales. That one event explains a big piece of the revenue miss right there.
And then there's the other classic headache for any global company, the super strong US dollar. When you take all the money they made in other countries and translate it back into dollars, your growth can look, well, kind of weak. But look here. In their local currencies, revenue and earnings were actually both up. The headline numbers were definitely hiding some of that healthier performance.
So those were the temporary problems, the headwinds. But what about the actual business, the core of the company? Well, if you look underneath all that noise, you'll see that ITRN's fundamental model actually showed some real strength.
And this right here is the key to understanding this company. Almost 3/4 of ITRN's money comes from stable, predictable, recurring subscription fees. So while those one-time product sales took a temporary hit, this subscription base, it actually grew by a solid 6% year over year. This is the real engine that powers the whole operation.
And that engine isn't just idling, it's getting bigger. The company added a net 40,000 new subscribers this quarter. That shows that even with all those external shocks, customers are still signing up.
You know what a growing subscriber base does? It prints cash. A lot of it. ITRN generated over $22 million in cash from its operations. That is a powerful, powerful sign of a healthy, well-run business. And all that cash, it just gets added to their already massive war chest. The company is now sitting on nearly $89 million in net cash. That gives them incredible flexibility to do whatever they want. Pay dividends, buy back stock, invest, you name it.
And maybe the most impressive number of them all? 0. That's how much debt ITRN has. Zilch. An absolutely spotless balance sheet, which is just a huge safety net in an uncertain world.
Okay, so with a financial foundation that's basically a fortress, the company isn't just sitting back and playing defense. No way. They're making some really aggressive moves to lock in future growth. Let's take a look. The CEO himself came out and talked about their next big push. He's talking about a new deal with BMW's motorcycle division, Motorrad, down in Brazil. And he believes this one partnership is going to bring in tens of thousands of new subscribers year after year. That's a big promise. And this BMW deal, it's not a random one-off. It fits perfectly into their really clear 3-part strategy. Step 1, keep dominating with car manufacturers in Latin America. Step 2, use deals like the BMW one to push hard into the huge motorcycle market. And step 3, use that success as a blueprint to get even more partnerships. It's a very clear roadmap.
Okay, so we've seen the market's knee-jerk negative reaction, and we've heard the company's much more optimistic story. After digging through all the evidence, here's our take on what you should be watching for next.
First, we predict you're going to see a big acceleration in subscriber growth in the back half of this year. Why are we so confident? Because management didn't back down from their full-year guidance of adding 220,000 to 240,000 new subscribers. And to hit that number,
After a 40,000 ad quarter, well, the pace has got to pick up, big time.
And as for the stock price, we expect it to claw back these recent losses. That initial sell-off was a pure reaction to the headline miss. As investors start to dig in and see the strong subscription business, the cash generation, and the growth plan, the whole story starts to look a lot better.
Which brings us to our final call. Our rating on ITRN is outperform. We think the market punished the company for temporary issues that were out of its control, while completely missing the strength of its core business and its very credible growth plans.
And as always, please remember this explainer is for informational purposes only. This is not financial advice.